Okay, everybody, how's it going? How is everybody doing today? I just wanted to make sure we get some people in here before we started our analysis. Can I get a audio and visual check in the Zoom as well as the YouTube audience? Right now, you guys should be able to see gold on your screen right here, hourly chart, as well as the live news headlines to your left. Let me know if the audio and visual, everything is good before we start doing our analysis. We are going to be doing fundamental and technical analysis across gold, GBPJPY, EURUSD, US30, GU, and we'll be looking at market sentiment, economic data reports, investor behavior, and other factors alongside market structure and price action for some potential entry points on scalp and intraday trades that we can run potentially through New York session and hold if the volume and volatility allows us to do so. So let's start off here on gold. So if you guys are in the free, before we even start into it, actually, before we even get into it, let's look at some of the key stream reminders for anybody that may be new here or is unaware of how we do things here. Understand that you can always go watch some of the previous live streams as well, 3 to 4 hours long on this channel to see how we operate and do things. But this is not financial advice or signals, even though it sort of is. You can ask questions about technicals, fundamentals, and overall currency markets, indexes, whatever floats your boat. Don't ask for direct signals, but share analysis yourself or any charts or anything else you want to. Any questions about the capital hungry private service, please refrain from asking on the stream. You have enough resources. To go find out about the capital hungry private service from the capital hungry website to the introduction videos as well on the YouTube channel. There's tons and tons of free resources provided by Capital Hungry, okay? Not just this live stream. For example, you have the Capital Hungry Twitter page, which constantly posts. Sorry, this is the main page, but you have the Capital Hungry Twitter page here, which is constantly posting economic related news headlines throughout the day. Like this has already posted over 5,000 tweets just since it's been active in October of 2020, right? So it's only been active for a couple of months, but just constantly posting headlines and useful information. You have the Capital Hungry Telegram analysis channel where I send chart updates, some news updates in here as well, different analysis, of course, and then the Capital Hungry YouTube page itself. I just also uploaded a Capital Hungry fundamental and technical gold analysis, which we are going to be reviewing now before we jump into some of our intraday analysis because it is currently active. So this was sent both in the free channel and for the private channel at the start of the week. But when I come up to the private channel here on gold, you can see that this was our higher time frame analysis. Pretty much we're looking for gold to peak up a bit higher to 1953, then looking for buyers to start exiting positions, and if we had exhaustion signs at 1953, a sell-off and pullback to retest broken bearish market structure, as well as create another higher low and another dip, failed to break structure, and then we were looking for buys from 1897 and 1902 area. Okay, primarily in gold on the higher time frames, we are still in a bullish bias as we are respecting bullish market structure on the intraday and higher time frames, and primarily the US dollar has been weak, so this obviously gives more confluences to long XXX USD pairs such as gold, GU, Euro USD, and be more prominently looking for USD CAD sells, for example. But anyways, this was the analysis. You can see gold now here. We started out the week with that initial gap up in the markets. We had that continued squeeze up till around 1953 to 1955. You can see from this new high created by buyers on the intraday on gold, especially as we had a lot of weakness in the US dollar overall. When we're looking at our safe haven currencies to tell us a lot of information about investor behavior and sentiment, you can see that primarily the Japanese yen and US dollar stand alone, which are safe haven currencies, have still been quite bearish on the higher time frame, as Japanese yen is failing to break above previous highs and the dollar is just extremely bearish. So we're going to primarily be looking at the Japanese yen and the US dollar just for sentiment clues and cues throughout London session. Meaning, if I see that the US dollar continues bearish to revisit these 6-year lows and continues even further, I have a lot more confirms to understand that there's higher potential for further gold buys, Euro USD buys, US30 buys, GU buys, and UCAD sells. And also, if I see that my basket of safe haven currencies, such as the US dollar and Japanese yen, are weak, this is telling me about overall market sentiment, and there's still a higher potential that global equities are going to continue their bullish run. Not just US Dow Jones, I'm talking about global stock markets across the board. We can also see that Asian markets, through, of course, Asian session, Japan's Nick, Chinese Hang Seng, Australian stock markets still holding quite bullish as well. Dow Jones broke into new all-time record highs, tapping 31K. Overall market optimism and investor confidence is still looking quite solid. You can also see that yes, gold gave that aggressive pullback we expected, but this is just how gold operates. The market moves in waves. When you have buyers jump in from a low point and create an intraday high, this reaction or pullback that gets created, as long as it does not break the previous lows or bullish structure, this is just the reaction of buyers exiting out some of their positions and cashing out, sellers jumping in, working with them hand in hand. And as long as you don't break structure, and as long as we don't break previous lows, and we still have that bullish price action, you can see we slowly do make our way to create a new high. Then we have that same sort of pattern form. Now, after generating some liquidity from our 1876 higher time frame key level, you can see, and with the market gap, that gold buyers extended to new intraday highs at 1953. So what we can confirm is that buyers are still printing new highs. Gold is still in bullish market structure. Yes, we had this aggressive sell-off that we took advantage of on the intraday, but this does not mean that gold is a higher time frame positional sell just yet. We would need a lot more confirms of a shift in market structure and more exhaustion at previous highs. For example, if we see gold now extend its way up to 1953 previous highs and fail to break, showing exhaustion at that level, and then we get a break of this structure, then we could say, all right, it looks like buyers are exiting positions and exhausting out of the market. We're starting to get a break of previous lows. We're starting to get a break of bullish structure. It looks like we're starting to see sellers come in control and bearish market structure developing. And hand in hand, we would also need short-term US dollar strength. We're looking at the dollar index. But what can we confirm here when we're dissecting the market as traders? We can confirm that gold buyers have created a new high to potentially revisit. Yes, gold had a pullback that was aggressive, but did this pullback break previous gold lows or even go to test previous gold lows? Right? Not hard to see. No, it didn't, right? Zoom chat, YouTube chat. Did this aggressive pullback break the bullish market structure? Did it break previous lows? No, it's just the market is moving in those waves. So what I'm accustomed to look for is a repeat of that of a dip or that higher low getting bought up. Now what we're starting to see is similar price action to here after a pullback or to here after a pullback. You're starting to get a strong reaction in a potential zone being created around our 1902 1897 region. And you also have to remember that this gold analysis was sent on Monday. So we already predetermined and pre-planned that if gold was to have that aggressive sell-off, yes, we're going to take advantage of those sells because that's like a 300 pip intraday move. But our higher risk, higher reward buy area was that 1897 to 1902 key level region, right? To retest previous highs, to retest bullish market structure and continue our way up. So you can see, zooming in here, even when we took capital hungry members took those higher risk buys, Even that has already ran for 250 pips. Now that we understand that the US dollar is still bearish, that gold is still respecting bullish structure, I am not looking for any sells. I'm looking for either a pullback, even if gold would do an aggressive sell off at London to revisit these lows and create a double bottom. That would actually be ideal because we could get more buyers entering the market from those intraday lows and then have some more liquidity to extend our way back to revisit these highs. But primarily now, I just want to zoom in the lower time frames to identify the market structure in this piece of price action over like the last sessionary period, like through Asian and New York session. I want to identify the buyers and seller strength to look for entry points on buys. Obviously, sells, the safest sells would be below 1902, right? We break below the previous lows, we break the bullish market structure, we can easily see sellers take gold a bit deeper to revisit previous price sensitivity areas when you're looking to the left. Okay, but until then, we can't deny this beautiful structure on the intraday time frames that's been respected since the end of November. Sorry, I just had an alarm go off there. All right, so does that make sense for gold? Now we are just going to be zooming down the time frames. And before we do that, I just want to give a quick reminder, because what do we have going on? As per economic data. Okay, so at 5 a.m. Eastern, we have some of the Eurozone Consumer Price Index information, and then we have the Eurozone Monetary Central Bank stuff at 7:30 here, but that's looking. It's just looking like the CPI, and the monetary statement is not like scheduled. It can be coming up through any time through the New York session. But as per the economic data, we have to focus on through London session. There's not much. So we're primarily going to be focusing on some of the reactive headlines to the left. And if you guys have noticed, just because the timing of the markets of how we're starting a new fiscal year, a fresh quarterly period, etc., right? And don't worry about it. I'll answer all questions and concerns in the YouTube chat. I haven't got to read any of the chats just yet. But just as we're started the new year, we haven't seen any crazy aggressive moves. Besides this gold sell-off that went to retest structure, we haven't seen anything too crazy. Usually towards the end of the year and the start of the new year, investors are primarily more sitting on the sidelines or they've exited positions. If you guys noticed on US30, before US30 before US30 had this upside move, it had this aggressive pullback, which was Christmas holiday optimism buyers exiting out positions before the end of the year and cashing out, and obviously jumping in from that dip again in previous lows. Still extremely bullish on US30, but we will talk about that. But overall, that market optimism is keeping our safe haven currencies weaker, such as the Japanese yen, US dollar, and Swiss franc, where we have to understand we're not trading XAU euro or XAU AUD. We're trading gold against the US dollar. So that US dollar impact, that US dollar price has a big impact on gold price, of course. So now we're coming on gold here. This is the 1 minute time frame, okay? You can see we had you can see that for about a period of 10 hours, the intraday period through New York, as we made that dip down to 1902 key level, which we expected, we had this bearish market structure primarily being respected and sellers in control. We had this low created at 1902, and then a break above this bearish market structure, as well as a break above previous 1 minute highs. Okay, so what I'm looking for now when we start to and what I'm identifying is we are starting to notice some more bullish momentum as we're developing some very lower time frame bullish market structure, breaking out of the lower time frame bearish structure, breaking out of key level 1923 and previous 1 minute highs, as well as showing some more potential for buyer side momentum. Okay, so now that it's pre-London hours, it's German Open. German Open was like 30 minutes ago and still running for. We have London Open at 3 a.m. Eastern. Primarily, what I'm looking for actual London Open, because there's higher probability of liquidity grabs or a retest of better entry points. Primarily, what I'm looking for is either a pullback to retest this minor structure, come back above 1923 buys, and watch price action accordingly, or the pullback, or if we get a pullback for pre-London hours in London, or we just consolidate here in the breakout above 1929 buys. Okay, this is if we have, and let me summarize this as well. Okay, if we have continued weak US dollar overnight, if we fail to break this minor bullish market structure, if we fail to break below 1912, and then of course we have these confirms of remaining coming above 1923 and 1929, I am in that gold intraday bullish bias, looking to take buys for London and extend them through New York. Okay, I would only be looking for gold sells if we broke below 1912, because that would show me breaking back below these previous 1 minute highs, breaking this minor bullish market structure, and breaking below a higher time frame key level to revisit previous lows at 1902, which is a 100 pip range down. All right. No, this is not XRP. Okay, so I'm just gonna mute myself so I can type that up and then quickly summarize and make sure nobody has any questions, and then we'll jump on to GJ analysis. All right, just give me 1 second here. Yeah, so don't forget some of those economic events, not too much over actual London in Euro session. So, not too much that we have to worry about there, just more focusing on some of the reactive live headlines to the left of your screen. Some of the key fundamental points is that market optimism is still holding strong into 2021 as global equity markets are bullish, as I showed you guys. The focus, as per mass media, has still been on vaccine rollout and COVID case spikes. There is some uncertainty developing with the U.S. economy and the political unrest there. But even it was so crazy. You guys saw the stuff that obviously happened with the White House and everything, right? I was laughing because I'm like, fucking U.S. going into a civil war, like not actually, but it looks like it's about to go into a civil war. You have you have like the Capitol, sorry, getting raided, and you have all this negativity within like U.S. elections with the U.S. economic growth, and then behind the scenes, Dow Jones hitting 31K, not giving a fuck. You know what I mean? So crazy, but yeah, it is something we have to keep an eye on and understand that some of these key recent fundamental points. But other than that, does gold analysis make sense? from how we went down from the intraday time frames to the lower time frames, looking at the US dollar for some inverse correlation, the market structure, price action, and do the trades that we're looking for London session, as well as potentially through New York session makes sense. Primarily, we are in a short-term buy bias with the break of bearish structure in this respect of lower time frame bullish market structure. I'm looking for a pullback at London Open, failed to break, and buys above 1923 and buys above 1929. I would only take sells on gold with these confirms, or if we have rejections at upside key levels for higher risk, higher reward sells. Okay, I would only see safer sells below 1912. We still have 26 minutes until actual London Open itself, so no rush. We're going to be watching the markets and for potential entry points until Asian close around 5 a.m. Eastern. And we have to understand that it's still very early into a new fiscal year, early into a new month. So we don't want to be too aggressive or rush into any trades. Our number one rule while trading is capital preservation and risk management. Okay. So don't forget your mental reminders. Yes, we're here to do fundamental analysis, technical analysis, do map out trade ideas, and provide value, of course, and make money. That's our prime. That's one of our goals. But as traders, we can't forget the psychology side, and we can't forget the risk management side, because that is most important, and that is heavily neglected in the trading communities, because it's always marketed to make money as fast and as quick as possible. Follow these signals, use this algo, use this risk, use this account manager, join. You know what I mean? Like it's always fast money is always what is marketed. So with that always being marketed, risk management and these things that actually lead to success get thrown out the window. So on this stream, we make sure to keep our mental reminders in check. We're always following our trading plan. We're staying as emotionally neutral as possible and staying as objective as possible. So when we do our analysis and we create trade ideas for ourselves and ahead of time create this checklist. If dollar remains bearish overnight, a typo there, right? You say, okay, check that off. We failed to break below 1912. Okay, check that off. We had our pullback, failed to break bullish structure, came back above 1923. Check that off. I didn't want to take those 1923 entries because they didn't look safe. Now we also broke above previous highs in 1929. Okay, now and we waited for London Open. You create this checklist of confirms that increases the probability of your trade, so you have more confidence to execute a risk on it. So now that we have created these confirms and created this roadmap, when the time comes and if we get those confirms, we're more confident to execute on it because we've already pre-planned what we're looking for. We're not just looking at the chart and saying, oh, buys look good now, sells look good now. No, we have distinct price points that we're looking to enter at. We have distinct confirms, not just technically and fundamentally as well, that we're looking to base a trade on, right? So just understand that. So only sells with these confirms. So just 1 second here. And don't forget those mental reminders. So now that if everybody understands what we're looking at for on gold, I'm just going to zoom in here on the 1 minute time frame so we can observe price action as fast as possible, because I would honestly, even if it came to 1912 and failed to break, yes, it'd be breaking this minor bullish structure, but I'm still in that bullish bias on gold just because it's following our analysis from the start of the week so well. Like it ran to 1953 perfectly. We had that pullback and sell off to 1902 perfectly. Great reaction of 300 pips from that level, where I really just want to look for a pullback and jump in with some more buyers if we get those confirms to revisit those previous highs and possibly, if we continue this trend, extend into new highs maybe by the end of the week. You know, what's the day today? Thursday? Maybe by next week. Sorry. But I don't primarily like to hold over the weekend, but it would be ideal to get these highs revisited by next week. Okay. So primarily, when I am entering trades at a key level, my target is the following range. So if I'm entering trades at 1929, yes, we're gonna be securing some entries as scalps, but one of the main rules is you either enter multiple positions or you close partials to protect yourself. So what I mean by that is when you're scalping in intraday trading, let's just say where we want gold to continue bullish, our target is obviously the next range 1939.5. This is a 100 pip range. We might not extend to that range just through London session. We might push up a bit, pull back, continue up, etc., etc. Okay? So what I'm saying is if we get that break above 1929 and you take an entry and we get a quick impulsive move, let's just say 20, 30, 40 pips, it's always good to secure partial positions or secure one of two or three positions you have just to protect yourself, secure some profit, and then let the other position run to intraday targets. All right. So our intraday target, if the buys run as we expect, we're looking to create another lower time frame minor 1 minute high and go up to our next level 1939.5. And for example, our sell target, if we do have our sell target, if we do get our confirms, and we break below 1912, people think like, man, gold comes all the way down here, we miss the sells. No, we're just developing our confirms because once we break below 1912, we were running the 100 pip range down to revisit previous lows as a target and our higher time frame key level. Okay. So we have 20 minutes until London. Oh, sorry, I'm not supposed to give you guys all this stuff to the left here. It's for the private chat. So now we're going to, so now we're going to do GJ and GU. Now we're going to go to GJ, EU, US30, then GU. GU is going to be similar to GJ. All right. So let's just zoom out here. We'll come to the hourly time and something similar here. Let's first zoom out and look at the market structure. All right. Let's even just blank this out. Okay. Everybody's good with what we're looking for on gold. There's no rush. Once we have our trade ideas mapped out, we patiently wait for them. We don't just execute or start jumping in trades willy-nilly. We wait for those confirms. If we get those confirms, we execute. If we don't, we don't. It's that simple. You don't have to always be jumping in a trade. Okay, so GJ, quick summary, higher time frame. We were at the 144 region before COVID hit the markets. As COVID entered the markets in March and we had that massive financial collapse due to pandemic markets, you can see that this historical low point was retested on the monthly and quarterly time frame. Once this low point was created and you had those years of financial gains wiped out in the stock market, whales fish out all the average Joe Schmoes, then you can see as central banks jumped in to help support their economies, of course, the Bank of England to support GBP, like specifically UK economy, we started to develop this higher time frame bullish market structure since March. Since March, even though we've had on some uncertain times that create these pullbacks, what can we identify as being created? Buyers are still creating new highs and sellers are failing to break previous lows or bullish market structure. Right? Yes, GJ tends to enter some messy intraday and higher time frame ranges, but you can't deny that even when there was so much Brexit negativity, even when there was the UK going into the lockdown and it went into another tier 2 lockdown, even when we had COVID case spikes, investors of GBP, guys who are long GBP that actually matters, the smart money, the institutions, whatever the fuck you want to say, the guys that actually move the market, they didn't give a shit. And how do we identify that they didn't give a shit about these negative impacts on GBP's economy? Because we did not see a shift in structure. We didn't see this bullish structure get broken. We didn't see previous lows get tested. None of that. So what can we confirm that now that we have the potential for a Brexit deal still on the table, it hasn't gone officially through legislation yet, but there is that potential of that Brexit deal showing optimism coming out of this 5-year slump. We can digest that even with the lockdowns in the UK, even with the even with the COVID case spikes, there was still not enough sellers order flow to break previous lows or break bullish structure. So what we are looking to do is waiting for a breakout above these previous intraday highs around 141 flat to do what? To revisit these highs at around 142.5 and create new highs. Because even though GJ can get a bit messier, consolidate, range, have some indecision, Brexit tensions, it still is respecting this higher time frame bullish market structure. And yes, COVID can be negative and fear filled on the headlines, but we don't care what the news is saying. We care what investors think. And we digest what investors think by looking at the technicals. And what we can see is we're not getting a break of that structure. Okay? So now when we come down, now when we come to the hourly time frame, we already have all of our key levels mapped out using higher time frame historical price points. All of these white lines across every pair, whether it's EU, US30, gold, whether it's EU, US30, or gold, all of these white lines are based on yearly, quarterly, and monthly historical price points because those time periods have significance in the real business world, right? Businesses, corporations, banks, the fiscal year, the start of the fiscal year, end of the fiscal year, the start of a quarterly period, end of a quarterly period, and the start of a month, end of the month have significance. Okay? So these are based on that. And then these red zones are psychological price levels following the quarter point theory on GBPJPY specifically. Okay? So now, when we are looking at GJ here, yes, it's starting to get a bit messier when you're seeing these up and down moves. But we can't deny that buyers have created a new high. Even with this massive aggressive sell-off, we did not break previous low or higher time frame key level 139.5, and we did get a breakout of lower time frame bearish market structure and bullish market structure developing, which we're going to identify now on the 1 minute. So primarily on the higher time frames and intraday time frames, GJ is still to me GJ is bullish. Like, yes, if GJ breaks below 139.5, no shit, we're going to take advantage of these sells down. Like the intraday analysis that was sent in the Capital Hungry private chat at the start of the week is this on GJ. Primarily in a buy bias, either looking for the breakout of those high buys. And this is intraday swing analysis. This isn't scalp trades, obviously. But if we broke below 139.5, which I'm just showing you guys, we would take the sells down to 137.2 just to set up better buys to extend to new highs. We would only see safer, higher time frame sells and swing sells if we had the Brexit deal backfire, new fundamental fear catalysts that shake the investor confidence, and a break of that higher time frame bullish market structure. Do we have any of those current firms yet? No. Do we even have a break below 139.5 yet? No. And our main bias of bulls is still holding strong. So with that being said, now we just want to zoom in the time frames for execution points. What I don't like in recent price action is this is quite messy. Okay? That's what I don't like. So I don't want to play any guessing games in this range from 0.200 to 0.500. This 30 pip range, yes, you can scalp this range, but I don't want to play guessing games in there. I like to trade what probabilities are in my favor. We are seeing some minor bullish market structure developing, which we're going to highlight on the lower time frames. But just when I'm looking at the intraday, obviously the safest buys would be if we broke above our price sensitivity area, which also lines up with psychological price level, 0.500. We break above there, we're easily going to go revisit these highs. But if we don't, we're going to probably get a deeper pullback to retest structure and then continue up to revisit those highs once more buyers enter the market and you have enough volume and order flow to do so. Okay? But otherwise, don't get angry. Don't fucking cry if GJ enters a range for 10 hours. GJ operates that way. In my opinion, gold for a scalp, just because of how gold moves. For example, gold can move 50 to hundreds of pips within minutes. So it can be very favorable to scalp because even in a range, you have these 50 to 100 pip ranges on gold, and it's and gold always has nice moves, like especially through New York session. Okay, but GJ, just the way it operates, if you backtest it, it has very strong impulsive moves for a period of time, and then you have these consolidation phases. And these consolidation phases on GJ, they might not be as large of ranges to play like gold. They're going to be like 20, 30 pip ranges for an extended period of time, right? So you can't fight. What I'm trying to say is when you can identify that the market is already in a range, when you can identify that volume and volatility is already looking a bit slower, why fight the market and stress out about something you have zero control over? Why waste that mental energy? What? And I'm only saying this from my own experience that I used to really, when I first started, fight the market, try to call tops and bottoms, try to fight ranges, get mad if I go up 20 pips in profit, then price comes back to my entry, like getting mad at nothing, getting mad at everything I can't control. So what I learned through that is every time I wasted energy on all of the factors of the market I can't control, it led to more emotional mistakes, more money lost, and more stress. But as soon as I focus my energy on all the factors in my trading that I can take control of, such as understanding when I trade, why I trade, how I trade, and what I trade, this is what started giving me more consistency. This is what started developing more patience and discipline, is focusing on the factors of my trading that I can control. All right. So what I'm seeing when I see this intraday range here, I don't want to fight the market in that intraday range, but we are still in that bullish buy. It's just something like this. We had this pullback. You see price enter this range. It can be very messy trying to scalp it. And you have to understand this potential range and this potential range in movement, this is like 15 hours worth of price action. Imagine a scalper who's just on the market for 3 hours dealing with that, stressing out. There's no point. So now we're just getting a similar order block and range formed around here, where once we get a breakout, for example, like this, you had this order block and consolidation zone at a support level, and then a break of that minor bearish market structure. Once you get a breakout of the order block and a retest here, you extend as buyers jump into a new high. So that's why I'm telling you guys that as we fail to break 139.5 previous lows, as we're above lower time frame bearish market structure, which I'm going to zoom in and show you guys shortly, and as we're developing bullish market structure, we can validate this is a consolidation zone and liquidity generating, where if we break the high of it, we're going to have a squeeze of buyers to the upside that we can run with. Does that make sense? So there's no point to play guessing games in the range where, once you break out of it, you will get that squeeze. So why fucking have that headache here for 10 hours? And you don't even, and the one thing is, you don't know that the market will range for 15 minutes or for 15 hours or for 15 days. I remember 2019, GJ was in a 30 pip range for all of November. If you guys go to GJ in November, there was this one like 40 pip range that GJ was in for like the whole 30 days. And there's nothing you can do about it. People are getting angry saying this is so boring, blah, blah, blah. It's like there's no point stressing about that. That is just the market. That is the nature of the beast, right? Sorry, just checking the headlines here. Just give me 1 second here. I just gotta fix something quick. Give me 1 second. Sorry. Don't save. Okay. Put this over here. better. Play this quick. All right, sorry about that. I tried to fix something up quick, so you guys got to see that broker commercial. You know how many? You know how many brokers have messaged me after watching the streams, throwing money at me? It's crazy. Pacific Union is paying me based on IB. They're not these fuckers. They want to see more. These guys are like, hey, if you bring us like whatever 50 clients, then we'll start paying you advertising fees because it shows us you're more consistent. And I brought them like 50 clients within like the first week. Oh, really? There's an error with the link? I'll get that sorted out. One sec. There should be this link here. All right, so anyways, let's go back to what we're talking about here. I need to fucking... It's getting hot in my room. Gold pulled back to retest this bullish structure, but again, we need London open to pull down, then come back above. Luca, with your link, we get $3 commission. Yeah, but you have to set up a Prime account. But that's the broker I use right now. I got like I had 25K with them, and I took it at 50K so far. But I got like a 50. I got 50 racks with them, and like everything's running smooth so far. So I wouldn't be advertising a broker that I'm not using, right? But I'm using these guys. Like this is what these guys, like when I was scalping with the private chat last night and some gold scalps during New York. Live account execution's good, lots and all that shit are good. Withdrawal deposits been good so far. Yeah, they're regulated in Cayman Islands. But anyways, yeah. So they're good for me so far. I'll fix that link in the description, but I sent it there too. Okay, so anyways, GJ now. Let's go zoom in on the lower time frames on GJ. Gold, we're letting it develop. We got the pullback so far we expected. London Open is in 3 minutes, so it'd be ideal to get that pullback first to 1920, then continue up. So Paul, the one thing was I don't know if you guys know, the only reason I switched brokers wasn't by choice. I'm not promoting this broker by choice. Well, I am promoting them by choice. I'm not fucking being forced to do it. But I mean, I didn't want to switch brokers, right? It was due to Canadian regulations, and a lot of these brokers that were based in Australia and ASIC regulations changing that didn't align with the Canadian regulations. So we had all these brokers such as Vantage, which I was using, leave Canada. So then I found this alternative broker, which is these guys, Pacific Union, got the exact same client. Has anybody have an account with them? And did anybody have an account with Vantage before? It's the exact same client portal, exact same deposit. Like it's the same website. I swear it's just like Vantage's backdoor website for Canadian clients. It's the exact same spread. The only thing is the 1 minute chart is a little bit choppier, but spread, commissions, the even the website, the client portal, it's the fucking same shit, man. I was like, what the fuck is this? They're all using the same thing. Like, are these all companies? Like, are these? They could be all the same company at the end of the day. Like, have the same parent company for all we know. You know what I mean? And we wouldn't know any better. The spreads are a bit worse, and it's a little bit choppier on the 1 minute time frame. But anyways, London open in 1 minute here. Okay, so let's just see. We're looking at the hourly here. We are getting a bit of a snapback, but we do want a bit of a deeper pullback anyway. So let's just keep an eye on that. Keep an eye on the same trade ideas we're looking for here. GJ, 1 minute. This is what I wanted to show you guys. So as GJ peaked those previous intraday highs, you can see on the lower time frame for about a 2-day period, we were respecting this bearish market structure very well. Our higher time frame key levels were being used for sell points for sellers to enter the market. Our psychological price levels were being used as a resistance, and we were respecting this bearish market structure all the way until we revisited these previous lows and key level at 139.500, and understanding that GJ higher time frames is still bullish. After that, you can see that we broke above bearish market structure and above previous 1 minute highs, which is 140.200. So now we can see that a order block and consolidation zone is being created from about 0.200 to 140.5. The safest buys would be that at London Open, we either get a pullback here, a quick pullback, and a break above 140.5 to take the 30 pip range to 140.8. Higher risk buys would be if we come down to 140.2 and then fail to break to take the buys up to 140.8. I would only be taking GJ sells below 139.800. It is London Open right now. Let's just give it a few minutes to cook, generate liquidity, and we still have another 2 to 3 hours. We're going to be watching the markets to let these trade ideas develop, okay? But primarily, does that make sense on GJ? That even with the negativity with their lockdown, even with the coronavirus cases spiking, it hasn't been enough to break the bullish market structure on the higher time frame. We have not broken the previous lows at 139.5. We're getting a break out of bearish market structure, and we're also starting to develop some lower time frame bullish market structure as well, just from this peaked low point to this liquidity grab area here, where I would only see safe sells on GJ if we have an extended move to the upside and get rejections, or if we break below 139.8. Primarily now, I'm looking for breakouts above the order block highs for buys, safest buys above 0.500. Or if we get a retest of this minor bullish market structure and 140.2 buys. I agree with you, Devang, if I'm saying your name correctly. If I'm not, I apologize. But yeah, what we have to understand is that the market is not just developed on economic data or logic. The market is created by humans. So one big factor in the markets is greed, corruption, and human psychology. The markets are literally created to target human inefficiencies and weaknesses, and there's so many factors involved that move the market. It's not just economic data. It's not just the institutions and order flow. It's overall human psychology, investor behavior, and these various factors that we look at. So now that we zoom in on GJ here, GU Leonard is probably going to be very similar bias to GJ, just because we have GBP as the primary, and the secondary in the quote is a safe haven currency. Here it happens to be the Japanese yen, and GU you have the US dollar as a secondary, which that is also a safe haven. So when we come to GU on the lower time frames, it's probably, or we come to GU on the intraday time frames here. It's actually even looking more bullish than GJ, but we're going to be doing some analysis for entry points on GU after, okay? But anyways, GU after, sorry. Okay, so far here, we're getting what we wanted, where the hourly candle did create a lower wick at the retest of this bullish lower time frame structure, but now we need buyers to push above our key level 1923.5 to take those buys, and the safest buys above 1929. These same trade ideas still stand for the buys and sells. We're just waiting for the confirms to develop so we can have more confidence to execute. Right here is like a big balls buy entry, because you're pretty much just basing it on the fact that this bullish structure won't break. But once we have the confirms that this pullback happened, we didn't break the structure, then we come above the key level 1923.5, we're showing more bullish momentum, and then of course we have the break above previous highs would be the safest buys but less rewarding. Okay. Vikram, that is because of the supply and demand impact on the dollar. So when the U.S. stock market crashed, Vikram, obviously you know the U.S. stock market took a big hit. Global stock markets took a hit, right? Coronavirus hit the scene. You had that economic reset. What did the Federal Reserve do to stimulate the U.S. stock market and the U.S. economy? Ghost RPG pretty much said it. Right? What tools did they use to help the stock market recover and help the U.S. citizens? The financial stimulus, right? The quantitative easing, the injection of the financial money markets. Exactly. Yeah, gold. Don't worry, we're not entering anything in gold just yet. That's why we did. That's why we're waiting for these confirms. So don't worry about it. So when you had, we're not taking sells unless we come below 1912. Anyways, I'm letting gold do its thing in this range. Okay. So when you had the Federal Reserve start printing out more US dollars and increasing the amount of US dollar money supply in the global markets, this creates an oversupply or an inflation of the US dollar, which decreases the value of it. And then as we start to enter this optimistic stage, you have the demand of the US dollar decrease and the supply of it increase, which leads to a decrease in the overall price. Right? It's just like if I had 50 barrels of oil one week that I didn't sell, and then the next week I had another 50 barrels of oil that I didn't sell, and I'm developing the storage of oils. One way I'm probably going to do to get rid of those barrels of oil is cut the price back to increase the demand of it. Right? But we just had a massive oversupply in the US dollar, and under demand under demand as we started hitting optimistic markets, and we saw that massive rally in the US stock market. All right. Yeah, gold, no rush. We're only taking these safe sells, and we're only waiting for these buys. We're not even playing with anything here in this range, so don't worry about that. I just have to go to the washroom quickly. Coffee's pushing out my insides, and it's only 7 minutes into London Open. So let's let the markets cook here and price action develop. There's an issue with the news terminal right now. Just give me 1 second as well. So I'm just trying to fix that, and I just have to go to the washroom. So those are the trade ideas for gold. The trade ideas for GJ are higher risk buys at 140.2 failed to break at the retest of structure. Safer buys above 140.5. I would only be looking for safer sells below 139.800. And then we're gonna when I come back, we're gonna analyze Euro USD, US30, GU as well. Okay, just give me a second. I'll just be right back. Don't forget some of the key fundamental points. This news bot to the left, I'm just having a connection issue with it, so I'll fix that when I come back. But there haven't been any significant headlines over the last 40 minutes, anyways. It's just been like some headlines about Taiwan Central Bank and Turkey, and that's about it. I'll be right back. Okay, I'm back. All right, the headlines are back up as well here. Nothing crazy in the headlines. Russia reporting new coronavirus cases, usual shit. Okay, what do we got going on? Okay, GJ, we're still waiting for the break above 0.500 buys. Only taking sells below like 140 to 139 8 area. Anything above that, we're looking for execution points at 0.200 and 0.500. Gold, you can see we had a bit of a deeper dip down for London Open. Not looking at any execution points in between this 1912 to 1923 range anyways. We're only taking safe sells if we break below 1912 key level and have some short-term dollar strength through London session where we are getting that so far. So if we have this continued short-term dollar strength, and even if it pops up to like 89 flat and then continues down, this upside move on the dollar standalone will of course have more confluences to push gold down and euro USD down. But other than that, we're still in our same bias. If this was a deeper liquidity grab, that's fine. We're still waiting for price to come above our key level 1923 for medium risk entries, or above 1929 for the safest entry squeeze up. GJ is at 0.500 right now. Let's watch the price action there. Keep an eye on that if you're looking to trade GJ. I'm just going to do some Euro USD analysis right now. And then we'll do some US30 analysis. What are you guys talking about? Japan news? What's Japan news, Leonard? Okay, let me read some of the, before I break down EU, and as you guys are waiting for gold and GJ to set up, just let me read if any questions in the Zoom chat, any questions or concerns in the Zoom chat, and let me read if there's any questions in YouTube. Can you check USD against China's currency, against the yuan? No, I don't trade that pair, sorry. I'll do that, a breakdown on that maybe during off hours. But while we already look at gold, GJ, EU, US30, I don't really want to throw the dollar against the Chinese yuan into the mix. People just the stream quality is bad, is it? It might be because of my internet. It looks okay to me, but I don't have the best internet because of where I live. Thank you, bro, for the way you break everything down in simple terms. It's like a business class. Yeah, that's the way. That's the best way to do it, right? Create your probabilities in that sense. I think BTC will pull back at 40K. I agree, Nolan. I think it's gonna hit like a flat round number like that, and we'll see buyers like cash out of positions and create that pullback. I don't trade. I don't trade it. I don't trade Bitcoin though. I just look at it because my dad has a couple coins from $4,000. I think he has like two coins from like $4,000. So sometimes I'll just be looking at the price for him, you know. Okay, so no questions or concerns. We understand what we're looking for on gold and GJ. It's only 20 minutes into London session. We're letting price action develop and waiting for our confirms. So let's look at Euro USD now. Now, Euro USD, same idea after that COVID market initial impact crash post March, very similar to our other risk currency versus safe haven pair. Why don't I have a lifetime membership? Are you talking about for Capital Hungry Private? Or are you talking to someone else in the chat? Man's watching from a Game Boy Color. Don't be saying that to them, man. You're gonna make me pull out my roasting self. But anyway, since you would notice that after the market drop and that dip was created, our risk currency versus safe haven pairs such as GU, GJ, AUD, USD, AUD, JPY doesn't matter. They've all been respecting this higher time frame bullish market structure with buyers creating consistent new highs. Now, we can't deny that Euro USD is bullish, and we can't deny that we've peaked new highs. but there is a lot of potential for a deeper pullback to retest this higher time frame structure, get more buyers in the market, and then continue to the upside. I would only be looking to take advantage of that pullback phase if we could break this minor bullish market structure we have identified on the lower time frame, which we're going to look at now. So yes, we're starting to get some buyers exhaustion at our higher time frame key level and new intraday highs, but this minor bullish market structure has still been respected for for at least a month or two now, right? Let's look at exactly here. Yeah, pretty much 34 days that this minor bullish market structure has been respected. So I can't confirm a pullback phase or a higher probability of a pullback unless we broke this structure and broke below key level 1.22. Then I can say, okay, there's a higher potential to get this pullback phase. Okay, there's a higher potential to get this pullback phase. Because there's only two ways that the market can generate order flow and liquidity to continue with the trend. You either get a consolidation phase, which is a liquidity zone and order flow generating in the market that doesn't break structure, which, like, for example, you can see here. Or you get a high created in a pullback phase and then a continuation up. Okay, so you don't want to start being a hero and calling top sells, because yes, you could get rejection here, but Euro USD could very much just range, generate order flow and liquidity, and then continue up with the overall trend and have a pop to the upside. That's why I don't want to start jumping in any corrective intraday sells unless we can validate a shift in this market structure. Does that make sense? Okay, just talking about from an intraday perspective. So obviously Euro USD higher time frame, bullish. Intraday, bullish. Buyers creating intraday highs. Dollar, yeah, dollar's having some upside now off its 6-year lows, but dollar fucking bearish as hell. Dollar been bearish since March. Okay? So with the dollar so bearish, it's been hard to sell Euro USD long term, and especially with overall market optimism, and especially when you're looking at their related equity markets. German DAX and Euro stocks been quite bullish, right? I don't trade the German DAX. The only stock market index equities that I trade is US30. But I still look at global stock markets across different regions because it tells you a lot about investor confidence in that region. So when you see that the German DAX or the Euro stock market is very bullish, it shows you that there's still a lot of confidence of investors in that sector, in that index. Sorry. And when you know that the stock markets are bullish and your safe haven currencies are bearish, it's stronger signs of market optimism. So when I'm looking at Euro USD here, yes, it's starting to show some exhaustion, but why be a hero and try to call a top? So what I'm primarily looking for on EU is still buys. I'm looking for either a pullback to retest this structure buys at around 1.225 area flat, or the breakout above previous high buys. I would only be looking for safe sells if we can notice the US dollar pick up more short-term strength when we're looking at the dollar standalone. Like, for example, if the dollar does do this extended pop-up, just as it gets bought up from its macro lows, then there's higher potential for Euro USD to give us a deeper pullback and correction as well. Okay? But until then, like, this is so bullish, right? So let's just zoom in on the 1 minute time frame. Yeah, we'll do GU after US30. Do I do membership sales? No. Do you ever see Lamborghini go on sale? Probably not, right? But you see Hondas go on sale. So if you want to go get a Honda, go get a Honda. But don't go to a Lambo dealership asking them for a sale. Okay, so now Euro USD. Yes, we can identify some of the exhaustion at these new intraday highs, which is only about 15 pips above the key level. Okay, I'm looking for buys above the key level or a deeper pullback to 1.25 then buys. Okay. Why are spreads necessary? Okay, do you guys want me to explain to you guys how liquidity works in like simple terms? Do you guys want a quick breakdown of liquidity and how it goes down the streams? Just from my own experience of working in a bank and from what I've learned from different people who have brokers and stuff like that as well. Okay, so liquidity is no different than cocaine. Understand this. When you have cocaine first get created and produced, it's at the top. So let's just say this is the original form of coke, straight from Colombia, straight produced out of the gasoline. You know what I mean? All right. No hands have touched it yet. It's at its purest form up here. Okay. With the original, this is the cartel, whoever, and this is the big cartel guy, the big top dog that controls this. Understand? Then, as it goes down to the distributors, it gets cut. So as it goes from the top of the food chain down, and all of the hands it touches down, it gets cut. Why does it get cut? So every single person down the chain can make their money. By the time I'm on coke as we speak. So everybody up the line can make their money. You have the original dealer at the top. You come down, it goes to the distributors. The distributors take it, they cut it to a certain percent, give it to their runners. The runners cut it, and by the time it goes to the actual customer, it's been touched by fucking 15 hands in a sense. And everybody's taking their cut and taking their percentage off of it by the time it's gotten to the final customer. Does that make sense? Okay? Now, liquidity in the market is no different. Liquidity starts from prime brokers. This is the top of liquidity. This is liquidity in its purest form. This isn't even talking about like JP Morgan guys. This is talking about liquidity providers behind them. Dark pool money. Okay? So think about it the same way as you think about cocaine. You have the prime of prime liquidity at the top. As soon as they go down to the private big banks like JP Morgan, Goldman Sachs, there is a fee taken out. A spread, a fee. So on every dollar that is lent out, the prime of prime makes some money too. Otherwise, there's no fucking business. Right? As the prime of prime, institutions, liquidity providers, and banks give the money out and down the line to the major institutions like Goldman Sachs, Morgan Stanley, Royal Bank, whatever it may be, then you have these guys branch out to the brokers. For example, Vantage or these other brokers, their liquidity providers, if they're regulated, is usually a bank like Morgan Stanley, or like if you go to the Vantage website. Where the fuck do you see this shit? Let's go to... Should be usually pretty quick on their website. Like, for example, these guys bank with National Australia Bank, which is a major bank in Australia, of course. But they also should have it here. I forgot exactly where it is. Of who their liquidity providers are. I think they it used to be public on their website, right on the front page here. But for example, whatever, you can see that they're partnered with the National Bank of Australia. So then, with National Bank of Australia, they need to make their money when they give the contract out to Vantage, the broker. They take a spread and fee and cut out. And then Vantage is the same thing when we're the cokeheads. We are the drug user at the end of the chain. Does that make sense? So by the time we get our liquidity to use, it's been touched and the fees have been taken out by 10 hands already. Does that make sense to everybody? So liquidity is like Coke. It trickles down the top of the food chain down, and everybody takes their fee out as it goes down the line. It goes from the prime of prime down to the large institutional big name banks that you know, such as like the bank of, such as like Goldman Sachs, J.P. Morgan. Then it goes down to private banks. Then it goes down to the brokers. Then it goes down to, if the broker has a white label, then it comes to you. So usually when a broker has very, very shit spread, it's because they don't have good liquidity provider partnerships. Right? Or they might not have as many liquidity providers, because usually a broker has multiple liquidity providers. Isaac, we don't send direct signals, but we do talk about exact price points to enter. So for example, like here on gold, you can see that once we were waiting for this pullback on gold to 1902, 1897, we were looking for higher risk, higher reward buys here. Like that's how I send it. If that's like what you're asking, I don't say, hey, gold buys right now, because like sometimes I'm not even awake. Like this happened during New York when I wasn't even awake because I trade London, right? But that's how I send it like that. So that is how liquidity works. So Prime of Prime is a firm that provides a retail broker. It's actually two levels above that. Um, Access to trading liquidity. These big banks are tier one banks. Not just anyone can trade with them. The PFP has access to the big banks, which sets up the retail broker with access. And then this, of course, goes down the chain to connect to smaller retail client orders with the larger orders of the tier one bank. You trading pretty much your goal as an investor and a long-term trader is to work up the ladder and directly connect yourself to either a bank like JP Morgan or to a bank like Prime of Prime. That's like you're not gonna have any spreads. You're not gonna have any execution delays. That's like the pure. That's like getting coke right from the cartel before it even touches any hands. You get what I'm saying? And I'm not talking about prime of prime brokers. I'm talking about prime of prime banks, which then lend to the major name banks, which then go down to the brokers, which then go down to us. Exactly. That if we could connect to these major banks like directly to JP Morgan or directly to Prime of Prime, if we had millions and millions and billions of dollars, it's like getting uncut cocaine. That's exactly what it's like. But does that make sense to all of you guys? How it trickles down the line, and that's why we as retail traders have to deal with spread, because the broker, the institutions above them, they're making millions and billions of dollars on these fees and spreads. For example, high frequency trading systems primarily makes money on spreads. So this high frequency trading that is done by banks, which is just primarily all algorithms and computer processing, it's done so fast within fractions of a millisecond that we can't even see. This is primarily making money on those spread switches. This is a bit harder to describe. That's a whole webinar in itself. But that's the spread is just, if you want to simply think about it, the spread is the dealer cutting the product before he sells it out because he has to make his money. All right. Okay, so gold is just all gold has done so far for London session is go up and down about is not that much different up and down here. I was in a tier 1 bank as a trader. What bank? BNP. Is that in Europe? I personally haven't heard of that, but that's interesting. But anyways, gold has not done much over London session so far. We're still waiting for these trade ideas. Did anybody take GJ buy scalp above 0.500 for 15 pips? We got a retest of 0.500 as well here, and the new 30 looks like it should continue up. Sorry, I was the Zoom chat. Can you guys see it? It's not bad for a quick scalp. It's only 10-15 pips so far, and we did get the retest of 0.500. Markets, I don't know if you guys have been watching London session to start 2021 so far. Been fairly slow, eh? There's been more action so far through New York. But if you guys took these entries at the breakout or the retest, it's still active. So if we break this previous 1 minute high, we should extend up that 30 pip range. But at least for a scalp, you could have got 10-15 pips. Yeah, now I'm primarily looking at gold as well if we get our sells or if we're going to get the buy set up. Euro USD, nothing significant. Let's take a look at US30 here. I'm just going to put a level at these all-time highs at 31K flat. Eden, yes, it's because usually at the end of the year and at the start of the year, investors are more on the sidelines, letting price action develop. Not just letting price action develop, but just letting the new fiscal year start, quarterly period. When I'm looking at Dow Jones, what would be ideal when we're looking at this very strong lower time frame bullish market structure and how we've had impulsive highs created is a pullback buys at 30.600. I hate buying at the top. I do not want to buy at the top, and I don't have the balls to sell the US stock market. You feel me? It stonks. The start of the fiscal year is January 1st. The budget fiscal year starts October, but just the start of the regular candle, like a calendar, it goes by just January 1st. But the US federal government, they follow their budget fiscal, just specifically the US, in October. Because the start of the year lines up with no Iron Man. It is October, but that's only for the US federal government. They follow the start of the budget fiscal year in October. But like for like a universal global thing, the fiscal year starts in January when quarter one starts. Like Q1 starts January 1st and runs till like what, end of March. Then Q2 is April till June. Q3 is like July till September. Q4 is October till December. Yeah, yeah. Can you explain how brokers make money from traders when you lose or win? Commission spread. Commission spread, your deposit fees, all the fees, the signups. You know how there's this, you know how that there's this theory that brokers only make money when you lose. It's a mix. To be honest, brokers would make a shit ton of money if they had a bunch of successful traders on their brokers, because those successful traders most likely would start to increase their lots and start to use bigger lots as well. So I would feel you would make a lot more money on commissions if you had 100 people. Okay, listen to this. I would feel a broker would make more money if you had 100 traders with like 100,000 capital trading like 10 lots, 20 lots, 50 lots, compared to having 100 traders who have $1,000 accounts or $100 accounts that crash it and are trading penny lots. I feel they would make more money off the consistent successful traders trading bigger lots because they're making more money on those commissions. Dealing desk brokers will make money when clients lose because they are betting against them. Yeah, obviously, yeah. Sadly, yeah. The stock market, okay, all of the financial markets, the whole financial market as a whole works hand in hand. Okay, the stock market doesn't have a direct influence on the forex market. They're just all flowing together. The financial markets are the financial markets. So when you have mass fundamental catalysts that are going to impact a specific currency, it's also going to impact it's also going to impact, of course, that country's stock market, because it's going to impact the economy. An example of that is something like when Brexit first came to the scene. Obviously, that's going to have a negative impact on GBP, the British pound, the currency, but it's also going to have a very negative impact on all of the UK corporations within that index, FTSE 100, FTSE, whatever you guys want to call it, man. If you pay the monthly fee, you get to come into the Zoom. Yeah, obviously. But Capital Hungry Private is closed. Yeah, okay, so gold, nothing yet. I do like how gold is creating this bit of a double bottom on the 1 minute. If we break above these 1 minute highs in 1923, we're taking that squeeze up to 1929. All right. GJ is heading up to our target of 0.800. So I'm gonna write this down as a dub. So GJ, from 0.500, the psychological price level. See how we also retested it on the 1 minute very nicely as well. Solid 20 pips. It should run the 30 pip range, slowly chugging away. New 15-minute candle here. Gold, we're still waiting for our gold setup to develop. GBP USD is probably pushing bullish, similar to GU, but we didn't really focus on that. No significant headlines here. No significant headlines. Back. How often do you do your taxes from trading? You do your taxes like once a year, but how much you want to withdraw depends on you. If trading is your primary income, it's going to be taxed as so. But if you have a salary job and your trading income is below that, it's only going to be taxed as capital gains. These tax code or regulations is different in every country. Okay, so in Canada, it's a lot different than the countries you guys are in. Canada taxes are a fucking joke. Why don't I have a lifetime membership? Because I might not do 10-15% is too much of what? What are you talking about? Oh, it's all about your preference of risking on a trade. That's just about your risk threshold and preference. I just have to go to the washroom again quick. If you guys are enjoying the stream, if you guys like the content that is shared, send it a like and subscribe, share it around. I'm gonna keep the screen here on gold just because I can see that potential for that buy squeeze setting up soon. The 1923. So let's keep an eye on that. GJ is still slowly chugging away here. Nothing crazy going on. There isn't any crazy economic data reports. There isn't any crazy economic headlines as well. Looking fairly stagnant and quiet. I'm just going to keep it on gold here in case we get the break above 1923. And I just have to go to the washroom. If you guys want me to do these streams more often, then you got to send a like and subscribe. You got to make it worth it for me, and I'll make it worth it for you guys. But I'll just be back in a second. Any questions you guys got, just leave it in the chats. No capital gains tax in NZ, New Zealand, you're talking about? I have someone that was going to trade a 100K account on FTO starting next week. I got a 100K account on my own. I'm just playing with the Iron Man. I do, but I'm just playing with you. I'm not teasing any FTMO traders. I'm not roasting people as much in 2021. You know what I mean? I had my roasting phase. I'm just trying to provide value, trying to make as much money as possible, trying to make as many income streams as possible. Trading, CH, YouTube, drop shipping, advertising, IB. I don't give a fuck. But I'm trying to stay away from the negativity, both that I create and that I get involved in. Because we're all human. We're all humans. We have times where we just feel like assholes. We do stupid shit, then regret it. You know what I mean? I just don't want to waste any more energy on nonsense. Yes, we will still roast on this stream, but at the end of the stream and just for jokes. But you know what I mean? Everybody's pretty chill with me. Only guy I don't like is Paul. even Raja stopped supporting Paul, eh? Yeah, I have no beef with Iron Man Clay. I have no beef with them. I think there's a lot of miscommunications, but I never had any issues with anybody. Evan, he's not in the Slack. Rakeel removed him, even though Rakeel's memberships is lifetime. Rakeel removed him from his Slack. You can see it if you search him up in the members. Paul just downplayed Paul. Okay, can we be honest? Let's be on. And for the people who cares, I'm not talking shit about him. I don't care what he does. But would Paul have any audience without Rakeel, without Raja, without Wickstone Live? Would he have any on? You have to understand that he signed up under Rakeel. He learned from Rakeel. He copied Rakeel. Rakeel gave him a platform. Rakeel basically handed him an audience and an exposure. And he goes to Rakil and says, um, and Rakil goes, "Hey man, I need more credit. Like you didn't give me any money. You're not giving me any support here. You're not selling any magic keys. You just keep promoting your own shit, and you copied me, right?" And Paul goes to Rakil saying, "I don't copy you. These are all my own concepts. You didn't invent these things. You're not the first person to do this stuff." And you have to understand that when that Rakil set Paul up, as this is one of the reasons I don't like Paul, is Rakil, who has, if whether you hate Rakil or like him or a friend with him or not, you can't deny that in the trading community over the last years, Rakil has developed a very strong influence. Man has like 100K organic followers on Instagram, all in the trading community. Man has like fucking 80K YouTube subscribers. He gets like 4,000 live viewers. You get what I'm saying? When he set Paul up, just on without anybody even knowing Paul, with Paul having no experience, no live trading proof, no nothing, he was already getting 700 views a lot, 500 to 600, 400 views a thing. You know what I mean? I never asked Rakil for a shout, and you have to understand, Paul was asking Rakil for a shout out. Paul was posting in Rakil's Slack. Paul was like using all of his clout. Anytime you've ever seen Rakil give me a shout out or talk about me, it's never ever been asked for. That's just Rakil looking at what I'm doing and saying, "Fuck, man, G's providing value. Let me give him a shout out." You know what I mean? A lot of my exposure came from like the Forex family days, where I was starting out with Rakil guys when he was first just starting mentorship. And obviously, I'm not going to deny that that when I came on Rakil streams, Rakil told me to start a free Telegram analysis chat and come on his live streams more to talk about the fundamentals, because there was nobody really in our immediate trading community who was combining both fundamentals with technicals. Everybody was just trading price action. So he wanted me to come on and talk about what I've learned to provide more value, provide more content. And because of that, all of his viewers enjoyed what I was doing. So I got a boost due to Rakil's influence, but it was because of what I was saying. Rakil just didn't go, "Hey guys, go follow Jeeve. He's gonna start streaming." Rakil told me to come on a stream. Nobody knew who I was, at a sense, right? And then said, "Hey, I really liked what you were saying. It makes a lot of sense. Do you have a course? Do you do this? Do you do that? Etc. Etc." Sharma FX is like a special ed retard female version of me. Sorry. But yeah, anyways. Okay, so GJ just hit our first target. W's in the chat. Did did exactly what we expected. Let me delete this cocaine mess. Michael, I understand that the streams are long, but I only make them longer because these are the hours I'll be watching the markets, and because the stream is only twice a week, not like 4 to 5 days a week. You know what I mean? I primarily only stream Tuesdays and Thursdays. So while I am streaming, even if the markets are slow, even if they're quiet, I still like to do analysis and provide value until I'm done watching the markets. You know what I mean? Who's that? Who's Controller FX? Is this a new person to the scene? I don't know about him. Oh, is that the guy who copies like Rakil like on a like everything Rakil does? Rakil was talking about that Asian guy, the Filipino guy. He copies everything Rakil does like to a time. I personally have no opinion on him. I just heard from Rakeel that he copies like every single thing that Rakeel does, from like stream to like Eden. I do think so. I do think that volumes and volatility will be a lot stronger a couple weeks into the new year. Yes. Gold is still teasing us. All gold has done through London session is just consolidate about 20 pips up and down. We still have not gotten our confirms for safe buys, and we still have not gotten our confirms for safe sells. GJ scalp buys ran the 30 pips, and isn't the reactions at the psychological price levels crazy? Who the fuck sent this points thing in this chat? We don't do that here. Who's doing this gamble thing here? Who's 24 hours? Gold does move better in NY, but gold moves all the time, to be honest. I can't say that gold moves better in NY. There's higher probability it's going to move better in NY because it's a US dollar pair, but there's been beautiful gold moves through London, so you can't say that. Cali, sorry, there's a lot of Okay, so what I was talking about, these psychological price levels, point 200, point 500, point 800, point 00, isn't the reactions to them on the lower time frames amazing? Like when we got this quick break and retest of point 500 or the breakout entry, look at the reaction now of some buyers exiting out positions here. So what I'm saying is, for the new hourly candle, if we get an hourly lower wick formed at 5 at point 500 again, there could be another buy scalp potential there. Or now we're looking for an extension above point 800. Okay. Euro USD, we did not look to take advantage of these quick sells or play any of the sells. I'm primarily letting EU do its pullback to generate better buys based on the intraday and higher time frame structure. Yes, this was a high risk sell area, but I just don't like trading against the trend. The GJ trade is either you enter at the 0.500 order block or you wait for the break and retest here. I've seen 150. Oh, we look. Oh, AM. We look at the 1 minute time frame for entries, so you don't have to wait for like a 15 minute or 30 minute candle close. On this stream, once we do our analysis of the higher time frames in intraday, we have our areas of interest lined up, and we have all of our price, like our key price points that we want to execute lined up. We start to look for execution points and observe price action on the 1 minute time frame, because here we can see the reactions of buyers and sellers the fastest. So where somebody else was waiting for a 15 minute or 30 minute candle close, we could already see a small support or the breakout of 0.500 and the retest here in the lower time frames. So there's the entry point here, the breakout entry, or the pullback retest entry. Sorry, yo, I didn't get to read all these questions. Any questions about the private chat? Just go to the Capital Hungry website, but the private chat is closed until the end of the week or next week. I don't. Okay, you guys have to understand this. I could open up the private chat and take in 600 members, no problem. I could if I really want to open up Capital Hungry and leave the signups open, I can take in 1,000 members. This has its benefits and its negatives. The benefit is I get to make a shit ton more money on Capital Hungry signups. The negative is that's a shit ton of distractions and a shit ton of nonsense and a shit ton of people, personalities, different backgrounds to deal with that takes away from my trading, that takes away from my time, and that is extremely hard to deal with for one person because Capital Hungry is only run by me. Okay? So I have to create this balance of having a decent amount of members where I can make sure they all get their value. They don't like, because when you have so many members in a chat or in a service, it's easy that if you have thousands of people sign up, few people are going to get lost and they're not going to be able to get their value. They're not going to get their questions answered, right? So I only keep in my private chat usually from anywhere from 200 to 400 members. This is the member area where I can ensure people can make it to the Zoom sessions. Everybody can watch all of the different educational webinars. They can follow the intraday analysis webinars and all of the breakdowns that we do week by week. Because besides this live analysis that we do, besides these Zoom sessions that we do in the private chat, I also already send breakdown webinars. It's like a 30-minute breakdown on just GJ. Okay. So before the end of the year, Capital Hungry hit that subscriber point of having like 350 to 400 members, and then I closed off signups. But the one reason why I have it paid month by month is because it gives me incentive month by month, and it also gives you freedom, and you don't have to get caught in any bullshit. There's way too many people who will pay a one-time fee for a service, and within the first week they don't like it and they wasted their money, right? Capital Hungry, if you do sign up when I open it, worst case, you pay me $110 for 30 days. So you're pretty much paying like $3 a day or something like that. And within that 30 days, you get access to over 50 educational webinars. One sec. Somebody just messaged me here. Sorry about that. So within that 30 days, right? The first thing you do when you sign up is you get chat access, but you get access to these 50 educational webinars. These are webinars that are not on my YouTube. These are webinars from psychology, fundamentals, technicals, key levels, lower time frame, like everything. You guys can read the different topics here. Okay? So as soon as you pay me $110 and you get access to Capital Hungry, the first thing you get access to is these educational webinars. Then you still get access to this Capital Hungry news terminal room. You still get access to all these Zoom sessions, key level price. Like for example, you know how gold we're looking at 1923, right? If we don't want to actively look at the charts, we have key level price alerts set. When gold hits 1912, if we had a pre-planned trade there, an alert gets sent to the chat, right? And I'm constantly doing like these polls to make sure like all the analysis webinars, everything makes sense for everybody. It's worth the value. So you get access to the 50 plus educational webinars. You get access to the 300 plus past breakdowns. You get access to the weekly flow where we break down the economic events we have, the main news headlines, mental reminders every single week. News briefing, political events, market sentiment, analysis breakdown webinars. That analysis breakdown webinar that I just uploaded on YouTube on gold that you guys enjoyed, the private chat has that for gold, GJ, EURUSD, and UCAD already, just for this week. That's just this week. All right. So what I'm trying to say is you have 30 days to make up your mind of whether you find value and you want to stay here or not. If you don't, worst case, you paid me $3 a day for 30 days and you cancel your membership and you never come back again. but at least you didn't pay me $1,000 for a lifetime membership and you find out you don't even like the service. So it gives incentive to me to have that to have some capital coming in and income coming in month after month, which is 100% dependent on my work ethic and my work output. And it gives some freedom and incentive, to the customers, to the clients. You don't get trapped paying some crazy fee and having stuck in a lifetime membership. You have that 30-day period where you get access to this newsroom where you have news headlines posting every minute, right? You get access to the trade room where you have key level price alerts. You have session alerts. Every time a session is about to open or close, you get these mental reminders sent automatically. You get price level alerts sent automatically, right? You get chart updates from me. You get Zoom session links, analysis, webinars. And you also get the banter chat, and you also get the Vimeo showcase, all of that, right? If you want more information on that, how the Capital Hungry private channel works exactly, you can just come watch this introduction video here. Welcome to, okay? But yeah, so that for the guy who kept asking why I don't have a lifetime membership, that is why. And at the end of the day, I am not a mentor. I am not a teacher. One of the reasons I'm such a dickhead and roast people and like don't really give a fuck about customer service is because I'm a trader. My end goal is to make money trading and find financial success trading, but through my process of trial and error, I have been sharing what I have learned, what doesn't work for me, what does work for me, and I've created content around all that. So understand, if I really wanted to, I could do a lifetime membership and accept 1,000 members the next month. But it just does not make sense for my life balance, for my trading balance. I would not be able to provide all those 1,000 people the content and value that I do, or any one-on-one time or questions. It's just too much. I'm one person, right? And you have to understand, I'm one person from one country, one time zone, but I have hundreds and hundreds of clients from around the world. I got people who are 18 years old in Capital Hungry and people who are 60 years old. People who are like females, men, different races, culture, time zones. So it can be a lot to deal with for one person. I don't have anybody else to help me. So when people say, "Gee, why are you so moody? Why are you so angry sometimes?" How about just think from my shoes and give me a break? Be like, "Oh fuck, let G be angry for now." Just let him get it out. He's fucking stressed. All right. Okay, gold, it's making another attempt now after multiple failures to break this 1 minute low. I'm hoping for this new hourly we can finally get our squeeze before the stream ends from 1923.5 to 1929. Let's keep an eye on that. GJ for the new hour, we didn't get that pullback we wanted, but if we break above 0.800, we can take another 20-point squeeze scalp to 141. Yeah. But yeah, you're never going to see me lie saying, "Oh, I'm doing this for the goodness of my heart and to help people." Yes, I'm providing value, but I'm providing value as I'm trying to create another income and make money. It's going hand in hand, right? I'm not doing this out of the goodness of my fucking heart. Like, come on, what do you think I'm some fucking, who do you think I am? Like, right? It works hand in hand. Everybody gets the benefit. And for anybody who gets mad saying, "Oh, fuck you, man, fuck Capital Hungry, fuck your streams, fuck Raja, fuck his broker, fuck Ted, fuck his broker, fuck Iron Man, fuck his streams, fuck Paul," remember, you could always put your face out there and your balls on the line, and you could always stream. You could always start your own broker. You could always start your own service and do it better than the people you hate. But will you do that? Probably not. You can talk shit about everyone all you want, but can you do better than them? That's a decision you got to make and put your balls on the line to do so. US30 hasn't done much overnight. There's nothing too significant to look at there. I am still waiting for. So, for example, on EU now, see on EU how we're entering more of this minor bearish structure corrective stage. If we just slowly keep making our way down, playing this corrective stage, then come to 1.225, that buy area, this would be higher risk, higher reward buys. The safer buys would be waiting for the break out of this corrective structure to validate that the pullback is complete. But I don't see anything to execute on when we're looking at current positioning of EU. If you really want, when we are identifying some of that corrective structure, if we get a pullback to retest this previous medium-term zone and fail to break, you can continue to play this bear structure and take sell scalps down to our buy targets. But I'm primarily waiting for the buys with the higher time frame trend and intraday structure. We also have the Eurozone Cpi in 40 minutes, the consumer inflation. And as per economic data, we haven't had too much. And as per any reactive headlines to the left of the screen, it's just been the general noise. Just like central banks doing their exchanges, a few speakers from like Japan's prime minister, but nothing high impacting, right? Like we don't have any crazy vaccine headlines or some Brexit headlines going on. Not very quiet start to the year so far. I really want this gold squeeze above 23, but I'm just waiting for it, of course, to get those confirms. Any questions or concerns? Leave it in the. Actually, I didn't even get to read the YouTube chat, so sorry if I missed any questions. I'm gonna read that right now. Let me start here. How about EJ? Is it the same as EU? Very, very similar. Yes. Just because you have the risk currency euro as the primary and the secondary is the US dollar. Let's look at how the US dollar is doing. The US dollar looks like it is going to make that upside squeeze up, but any cat bounces or bounces the US dollar has had, it's usually just from a new low that's created, which is right now. This is a 6-year low. Was a low. This was a low. These cat bounces get faded as quickly as they came into the market. It's just a bounce where you have sellers exiting positions, buyers jumping in hand, a lower high gets created, and we continue down. All right. People working at that broker were probably copying my trades and making good money. That broker, some of these brokers watched the streams and they asked for some of my trading results, and they were willing to give me like 100K accounts. It's pretty crazy. It's pretty crazy, like how like people got money to blow out here. Like people have money. At the same time, you think like oh man, people are struggling. On the other end of the spectrum, there's guys who are putting 100,000 in one trade, and they're like just for shits. Do you think Uncle Ted really didn't have a mentor? Everybody has had some type of influence in their trading journey or learned something from someone else, whether it be through a book, through a video, through a mentor, through a service. What do you think about Q Banks? I think Q Banks is more of a marketer and businessman. Q Banks is by no means a trader. He has created a business around trading that he milks, but Q Banks is not a trader. Q Banks is the same guy where if you go message him about the GoFundMe he made 2 years ago when he crashed his 100K account, he'll instantly block you because he knows. There you are. You showed yourself a peak there. I don't know what that means. Are you just a one-man show? Yes, I give credit. Thanks, Iron Man. You'll invite me to your group. Maybe the way he trades will help some of their. Yeah, sure. Jeev is gonna be bigger. Uncle Ted and all of us guys are friends. We don't compare with each other. Will you come present your style to my group? Sure. Why do I use the 1 minute time frame and not the 15 minute or 30? Because the latter has more stronger. Because the latter has more stronger confirmations. Okay, so all technical traders preach price action, which is literally the observation of active price movement. When you're scalping or looking for entries, what is the time frame that you can watch the action of price, the reaction of buyers and sellers the fastest? Is it the 30 minute? Is it the 15 minute? Is it the 5 minute? Or is it the 1 minute? Obviously, there's a tick chart, but that doesn't count because it's not clean. It's the 1 minute time frame. When you already have your price points and areas of interest lined up, the 1 minute time frame allows you to watch buyers and sellers reaction at these price points faster than the other time frames. So when somebody else is waiting for a 30 or 15 minute candle close and then waiting for the next 15 minutes to see what it does, we're probably already in a trade based on the 1 minute price action at a key area of interest. And this concept of entries on the 1 minute is not just strictly for scalping. It can be used to get very refined entries to extend trades for swings, intraday, whatever it may be. Okay? Q Banks makes hundreds of thousands. I don't care. He Q Banks can show he makes hundreds of thousands, but has Q Banks ever provided value to anybody for free? Does Q Banks ever provide analysis ahead of time or say, hey guys, if US30 does this, this is a good buy or sell? Or does he just show up every couple of weeks with a video about a car and a random screenshot of $100,000 trade? Right? That's all he does. Q Banks, these guys just have a normal pattern to keep the dumb audience engaged, which is so easy to see. Make some vlog, show what you're eating, show what you're driving, show a random trade. You get what I'm saying? That you'll see this with every marketer. Make some vlog, talk about your life, show a restaurant you went to, show a car you're getting into, show some random trade. The trade doesn't have any analysis behind it. The trade doesn't provide any value. It doesn't break anything down for anyone. It's just showing, hey, look how much money I made. It's like me working a salary job, getting a paycheck and posting that paycheck and saying, hey guys, look at this paycheck. Fucking stupid, right? It's different if you're posting a trade and saying, hey guys, I sent this analysis for free. This is the analysis behind it. This was the trade that was taken. This is the breakdown after. This was the reasoning behind it. This was the why I took the trade. At least that teaches your audience something. At least that provides them value. But just to show a trade with nothing else, you might as well just you could have taken a picture of your shit in the toilet, and it would have had the same impact on the audience. Because at the end of the day, somebody's going to see that and say, "Oh, cool, $100,000," and they're going to scroll past it, and they're not going to get anything from it. They're not going to learn anything new. They're probably going to get demotivated about their own life. Yes, Michael, I only scalp based on the 1 minute. Yeah, you could check any of these Insta traders. One time when I was on Instagram, all of these IG mentors like Sean Lee, Amin, Astro, fucking Q Banks, Druzy Banks, fucking Q Banks' other friend, Daniel Savage, Lambo Raul. You know what I did? I took all of their profiles and covered their faces with a smiley and covered their name and posted them all next to each other and said, tell me who each of these people are. Can you tell any of these people apart? And they fucking snapped. These guys fucking got so angry. I covered their names, covered their faces. If you screenshot Lambo Raul's profile, if you screenshot Daniel Savage's profile, if you screenshot Sean Lee, Amin, any of these marketing profiles, and you cover their name and you cover their faces, you won't know who the fuck is who. You will have no idea which one is which. That should tell you enough. They're just following this cookie cutter marketing system. Like right now, if we go to IG, Q Banks, Daniel Savage, Sean Lee. I don't have IG anymore, by the way. Somebody made a capital hungry IG for me. It has like 1,000 followers, but that's not me. I think that's my girlfriend or it's one of the CH members. But I got off IG just because it's so toxic, man. At least YouTube is like a social media platform, but like there's not all this constant bullshit. Like you're not constantly seeing all these memes and all this nonsense. Fam, what the fuck is the difference between these man's profiles? These are traders. These are financial market traders. Cover all their fucking faces in these pictures, and what do you have left? Nothing. No substance, no content, no value. What do you have? What's the difference? What's the difference if I covered their faces? What's the difference between these profiles? What is the honest to God? What's the difference between their marketing tactics? What's the difference between their posting schedules, their profiles, their content they post? What's the difference? What's the fucking difference? Lambo Raul's only rich? Oh, I can't even see it. Lambo Raul's only rich? You know why? You know why? Because of this man right here. You guys know who this guy is? For example, Raul has 130K followers. You know who this guy is next to him? That's Dr. G Smiles. You know where all of Lambo Raul's money comes from? I can't fucking open it because I have all these other ones open. It's this guy, Dr. G Smile. Dr. Raul Gonzalez. This is Lambo Raul's rich ass dad with 1 million followers, celebrity fucking dentist, millions in revenue a year. Raul is basically a spoiled rich kid. He doesn't know shit about the markets. He's never bought a single thing himself. He's fucking got a rich ad. His dad's got a fucking Lambo in the fucking dentist ad, man. This is Miami. This is Miami for you. This is a dentistry ad. There's a Lambo in it. You know what I mean? This is the man behind Raul's money. Raul C. Gonzalez. Dr. G Smiles. This is where all of so if you go to, I can't search it, if you go to Dr. G Smiles page, you'll see all the same cars that Raul posts. But my point is, everybody gets fooled by this and then realizes that there's no value. There's no value. There's no fucking value. What is this shit, bro? Nobody cares. Why are you taking so many pictures of yourself? Like, Sean, stay off the fucking Molly. So you gotta worry about is your face sinking in. Look at this, the same thing, man. Prosper with Cobbs. If you go to Dr. G Smiles Instagram profile, all of the Lamborghinis, they're under his ownership. All of the cars are under his dad's ownership. Where do you think? Just use common sense. What kind of dumbass question is that? His dad has 1 million followers on Instagram, 1 million, and is a celebrity dentist in Miami, where you can Google he makes millions of dollars in revenue a year. Raul is a 22-year-old fucking rich kid. What you put one and one together? Come on, you can't be that fucking retarded. But yeah, so everybody got mad at me when I did that. So what I did was I posted on my IG all of those profiles with the face covered and said, tell me the difference. and all of them snapped. Every single one messaged me and they snapped. No, the only reason I wanted to banter about that is because markets are fairly slow tonight. GJ ran great. Gold is ranging. We're waiting for the break above 1923. EU, we're just watching this bearish market structure. US30 ranging when we zoom in here. And it's an hour and a half into London session as well, like prime London volume, and we're not seeing much. And we have Asian session closed in the next 30 minutes. And there's higher potential for pullbacks from Asian session close to pre-New York hours, right? Yeah, all I said, I didn't say anything. I didn't talk shit about them. I just said spot the difference. And all of them snapped at me. But the one thing that, like, listen, you could rent these cars, and you could have money comes and goes, right? Money is a very, very interesting concept, and how plentiful it is in our world, and how much opportunity there is for that, right? Money comes and goes, but something someone can't take away from you is your value, is the work you put in. And when you have no value, when you haven't put any work in, all you have to hold on to is that marketing side and that social influence side of creating this image that you're successful. And when you constantly focus on just that image of externally looking successful, you are going to fail. I'm trying to see if GJ for this new 30-minute candle can create a quick lower wick down here, then flip bullish or support at 140.8. If you guys are remember, runners risk free. You secure some partial positions in the scalp profit and then let your runners go. Your guys' runners, if you're entered at 0.500, are still active if we extend up to 0.141 flat. Jeeve, why do they all have 3+ cars? Just for all these guys have, and you know what else is interesting? All these guys have $100,000 leased cars, like a Lamborghini, a Urus, a Ventador, whatever it is. But all of them are renting a fucking condo they stay at. Mans be having a fucking Lamborghini without even owning a garage. They're parking in their public garage in the basement as they take the elevator to their fucking condo that they're renting. It's just, Miami is not real life. Miami is a fucking TV show. Okay? Miami is not real life. Miami's a movie. And most of these guys, do you guys notice that these marketers, every 3 to 6 months, they exchange their supercar for another supercar, but they play it off as like, hey, I'm getting bored of this Lambo. I want to go get this Benz now. They're not getting bored. The lease agreement is over. That's what it is. They're not getting fucking bored of the Lambo. The lease agreement's coming to an end. So now they gotta go get a new lease agreement, and they're gonna get a new car instead, so they can say, hey, look at me. I just got another new supercar. Every 3 to 6 months, you're gonna see the marketer get a new supercar and not keep their old supercar. If they're so rich, why? How come they're not keeping all these cars? For example, you know what? You guys ever get bored and go on YouTube and you see some of these actually rich guys, like these millionaires and billionaires, show off their garage and it's just fucking loaded. They say, "Oh yeah, I bought this car 20 years ago. This Ferrari, I bought this one 5 years ago." They're keeping all their toys because they actually have wealth. So if they really enjoy the supercars, when they buy one, they go buy another one because they have the money to do that. And that's their interest. These guys, when they want a new supercar, they go get rid of the old one. Why? Because the lease is over and they go get a new lease. Just because someone writes a check for 100K and posts it on IG, I could go to my fucking bank right now and write a check for $1 million. Does it mean it's real? No. But people on IG like look at that shit. They go, "Holy shit, $1 million check! Oh my god, I'm gonna go fuck. How'd you get so rich, bro?" People are fucking retarded. Yeah, don't worry about this banter now. We've already done our analysis. We've already understand the key fundamental points we're focusing on, the economic events, the mental reminders, stream reminders. We've already executed in this 30 pip GJ trade ran clean. We are waiting for gold setup and potential setup on EU. London session has been fairly slow. There hasn't been any economic data reports to bring volatility or higher volumes, and there hasn't been any crazy headlines to the left of the screen as well here. Okay, the new 30-minute candle just opened up. I'd like for it to create a lower wick first, then come back above 140.8. Yeah, there's a ton of rich guys like that. Like when you see these oil sheiks, they'll have a warehouse filled with supercars that they own that are just toys to them, right? Or you see like even like fucking I everybody's probably seen like Jay Leno's garage or that YouTube video and shit like that. These people actually have wealth developed over years, and their interest is cars. It's a toy for them. You don't see them fucking exchange cars every month. They just go buy another one. But these marketers, they change their car every 3 to 6 months, and they try to play it off like, "Oh, I'm bored of this. I'm bored of this car." Who the fuck's getting bored of a fucking Aventador? You're not getting bored. The lease is just over. And then once that lease is up, they go get another lease. They go from getting a Lamborghini to go getting a McLaren 720S. 6 months after that, now they're in a Lamborghini Urus again. But at the end of the day, it's so the soul is just empty. The sad part, you know? It's just an empty soul. It matters because they are selling a fake dream and false narrative, trying to prove they have money and wealth by showing off these supercars when in reality it's a lease or it's fake just to generate sales. That's why it matters. It's this fake marketing scheme is being used as a manipulation tactic to generate sales. That's why it matters. People get taken advantage of this. And it's not their fault. People allow themselves to get taken advantage of due to a lack of knowledge and due to being extremely simple-minded and ignorant. It's faults on both ends. It's faults on the end of the customer, and it's also faults on the end of the corrupt seller. No, I don't watch Trading Nut. Trading Nut is what Trading Nut isn't even a trader, man. Trading Nut's giving challenges to other traders. When has anybody ever seen Trading Nut take a trade? I've never seen him take a trade. I just see him do podcasts with other traders and challenge other traders and then judge other traders. But I've never seen him take one single fucking trade. The trade I'm waiting for is the gold buys above 1923. Or possible like let's go to GJ on the 30-minute here. See how we had, remember I was talking about once we get a break out of this consolidation area, it's possible now, similar to here. See, you had this little minor consolidation zone. Then we had this aggressive break to the upside, and then this retest of that consolidation zone and the previous highs. Buyers jumped in, then we extend. What would be ideal is with as how we have Asian session close in 24 minutes, and this also lines up with new technical 4-hour candles, right? And we have and there's higher potential for a pullback pre New York hours. It would be ideal to get the new 4-hour candle to retest 140.5 and then take further buys up and get a repeat of that to revisit these highs. We might not get that though. So what I do want to look at is this 30-minute candle. If it just creates its lower wick and pops above 0.800 when we're looking at it on the lower time frame, we can take another 20 pip squeeze. We can take another 20 pip squeeze to the next psychological price level 141. And if you have runners still at 0.5, you can hold those. But just be cautious that as we had a clean break of this consolidation area, if you have any runners from 0.500, don't be surprised if at Asian session close in the new 4-hour candle, we get a pullback to retest that price point and then continue up through New York. Okay? Because what we are noticing is volume and volatility has been a bit slower. So with that being said, there is more potential for buyers to exit out positions and get more aggressive pullbacks. And we do have Asian session closed in 22 minutes, as well as Euro CPI in 22 minutes. We'll look at Euro USD. Headlines to the left of your screen. Again, nothing much going on. Japan's prime minister is talking about Olympics. Spain's health prime minister is talking about like vaccines, but a lot of the vaccine talks have been priced in over the last 3 to 4 weeks. Any questions or concerns, leave it in the YouTube chat. If you guys enjoy these streams and want me to do it more often, analyzing these different pairs, the trade ideas, and everything else, make sure you send it a like and subscribe. And I'm just going to go to the washroom fairly quick. Okay, back. Just give me 1 second here. Turn this fan off. See what's going on in these charts. Okay, Asian session close. Asian session close in 8 minutes here. We are getting a bit of a lower time frame order block formed here, where if we do get that break above 0.800, we could get that 20 pip squeeze quick, but we still need the break above 0.800 and these candle body highs in the 1 minute, and of course, which lines up with our psychological price level and key level. Otherwise, if we don't break this 1 minute high and price sensitivity area, there's higher potential that if we break to the downside of this order block area, we'll get that deeper pullback for better buys. But otherwise, potential 20 pip squeeze coming up if we have the clean break above. But just be cautious of the hourly candle close in 7 minutes, Asian session close, and the new 4-hour candles. Gold did not give us our safe buys, no safe sells either. Pretty much for all of London session, for like the last 2 hours, gold has been in about this 30 pip range, going up and down. So nothing too significant there. We didn't take advantage of anything there. Here it goes. Here it goes. Oh, sorry. Let me read the chat. Any questions in the Zoom chat? No. All right. What I missed in the YouTube chat? Yeah, we're gonna keep the stream going for like another 30 minutes after Asian close, then we'll call it a night. So I just started trading, and obviously I won't start making money without learning. But how do you predict either it's going up or down the value of a certain stock? We're trading currencies here. Stocks only go up, correct? Is everyone ready for the short of the century on US30 coming up? Oh, US30 fell a bit from the 3100 here. It's not bad. How much it fall here? Like that's a good scalp. that could potentially run longer. It was a nice rejection of previous highs, an easy 100 points. Let's see if this GJ 5-minute candle stays above 0.800 here. But the only thing I'm iffy about is this Asian session close and new hourly candle. Euro USD slowly making its way down to our better potential, higher risk and higher reward buy area. Gold, we're only taking sells below 1912. We were starting to look like we were creating support, but then we can see the rejections at these previous 1-minute highs and failure to break above our key level, as well as the dollar did what we were talking about having that pop up from its 6-year lows. It's still extremely bearish. This is the dollar on the 30-minute chart, dollar index. Still extremely bearish, but these intraday moves in the dollar, these cap bounces, are obviously going to have an impact on any US dollar pairs we may be trading. Where this upside move on the dollar is giving stronger confirms for like the EU downside play, and now gold having a bit of a squeeze to the downside as well. Any other questions here? Controller FX, I have no idea who that is. Realest trader on earth. Thank you, Trick Talk. Jeeves style is way different. Jeeves style is way different than Raja's. I'm new to Jeeves vids. I thought they'd be a similar trading style. There's a ton of webinars on the Capital Hungry page, so you can see exactly how I trade if you want to learn from it, or you can join the Capital Hungry private chat when it does open up again, when I take in more members. Them samosas be hitting. US30 needs to break the intraday bullish structure to get a deeper pullback. I agree with that, A-Rod. Oh shit, my bad, Zoom chat, my bad. My bad. EU melted? Holy oh bro, I thought right now. EU melted, holy fuck. The dollar shocked everyone after that horrific news. Everyone, EU fucking melted after that horrific news. Just doing a pullback, man. Relax. Holy, you guys are spazzes. It's just doing a pullback at new highs it created, right? GJ looks good for a quick scalp to the upside if it wasn't coming like 2 minutes into Asian close and the new hourly candle. You know what I mean? And I don't even know what news he's talking about either. I don't know. We haven't had any negative, we haven't had really any like groundbreaking news. The dollar is just moving like how it regularly moves every single day, every single week. It's just it created new lows at 6-year historical lows, and the dip is getting bought up by buyers. The same time sellers are exiting positions. You're getting that pullback phase, but the dollar is still extremely bearish since November. So this is the dollar's market structure. The dollar, if it doesn't break above this market structure, it's still going to continue It's still going to continue down. I thought those thugs broke into the White House. Yeah, that was like during New York session. But as per the movement on the dollar, it's nothing like it's nothing groundbreaking in that sense, you know? So new hourly candles right now, new 4-hour candles as well, in Asian session close. Higher potential will get some pullbacks here. Yeah, those thugs like that negativity during New York session didn't really have too much of an impact on the markets. Like you didn't see the US stock market get sold off or anything crazy happen, you know? Yeah, so GJ doing that. That's what I meant. That with the new hourly candle, the new 4-hour candle, GJ just doing that little bit deeper of a pullback. Still looks good if it comes above 0.800. I'm just gonna go fill up my water bottle quick. I'm starting to get hungry too. It's almost breakfast time. Let's just see how these intraday candles closed and how they're looking. Not the strongest bearish candle close here. We're looking at the hourly as well. We are if we have this candle body on this hourly close above this area at 1915, those buys above 1923 still look quite good. Do I think the value of the USD is fabricated? 1,000,000%. Euro CPI was pretty much on forecast. Nothing too significant. Yeah, so I'm just watching gold here if we still come back above 1923.5, but same trade ideas. These trade ideas and analysis we did overnight that has yet to play out yet are still valid through New York session. So if you guys are trading New York or watching markets through New York, that analysis, those trade ideas are still very valid. Okay? Yeah, I'm with Ghost RPG. I think that whole Capitol Hill incident was just a fucking show, just a distraction, pure setup. These guys went in so easily. The military didn't show up. They just you have all these pictures and videos on the media. Like nobody did shit about it. It's fucking so weird, so fishy, so fishy. Will the Capitol Hill incident have any effect on the stock market? No, because you would have noticed that impact already when it first initially happened, right? Fucking Mnuchin and Pelosi behind it, man. Mnuchin's a fucking, Mnuchin, Trump's like right hand man, whatever. He's like a previous investment banker and movie producer. Now he's like a fucking politician. Imagine being an investment banker, manipulating the markets, and a movie producer. Literally making. So imagine what he's doing in politics right now. Apparently, a lot of those protesters that were captured in the images were also previously seen at like the BLM protest months ago, like the exact same people. But you know what I mean. At the end of the day, we're never gonna know the truth. We're just gonna have to believe in what makes logical sense to us and helps us sleep at night. We'll never know the real truth. I was really looking for the gold setup, but at least GJ played out. If you guys have runners on GJ from 0.500, they're still active. It's not like price came back to your entry or anything, you know? Is inflation possible in America? Inflation is already very, very much active in America. Like the US dollar is heavily inflated and oversupplied. Oh, GJ went up 10 pips after 0.800. Slowly chugging away here, but still still a lot of time into pre-New York hours. I'm going to be ending the stream in about 20 minutes because we started the stream around 2 a.m. Eastern. Next week, the streams will be every Tuesday and Thursday every week if I feel like it, you know? Sometimes you guys don't like these streams, so if you guys don't like it, then obviously I'm not going to do it. Trading time? Like, wow, Babu production. Why are you spamming trading time? What do you mean? Like my trading time, or like what's the best? Like, what's your question? If you can spam trading time 10 times, at least type out something like better too. Type out a better. All right. So what do we got going on here? As per any headlines, any significant headlines? No, just summarizing the Euro CPI data, which was basically like on forecast. No major impact from that. Just watch some of the data during New York session if you are trading New York. Key fundamental points we already discussed. We still talked about a lot. Even though it's like the first live session of 2021, I wasn't expecting too much of a turnout, and I wasn't expecting too much out of the markets just because it's early into the new year. But at least we still got to talk about a lot, from like market structure, price action, higher time frame down to the lower time frame. Yeah, not too much happened as per the markets and volumes of volatility. Like GJ, we got that nice upside move we got to take advantage of, but other than that, most of these other pairs were ranging. Gold just been ranging 30 pips up and down. GJ looks like this hourly and 4 hour candle is going to give us a deeper pullback for pre New York hours. Yeah, the setups are still valid through the setups are still valid through New York session. The GJ trade that was taken was safer buys. We were looking for above 140.500 psychological price level. But if you want to if you want to see how we were expecting that and the analysis behind it, you can just rewatch this webinar or rewind it. Just because we've been streaming for 3 hours now, and we started at pre-London hours, and it's already Asian session close and coming towards pre-New York hours. So this is going to be saved and uploaded soon anyway, so you can always rewatch it. Any more plans of posting more breakdowns? Yeah, I'll probably like let's just say I do three or 3 to 5 of those breakdowns a week for the private chat. I'll probably post one of them every week on my YouTube for free as well. Like for example, that gold one I posted that you like if you like that in the private chat, the same way I did that gold higher time frame analysis with the chart breakdown, I did UCAD, Euro USD, GJ as well, right? So I could do that, yeah. Yeah, the refugees are back. If 90% of traders were profitable, would Forex be done? Yeah, probably. But 90% of traders won't ever be profitable. Do I trade London every day? I do Zoom sessions for London with the private channel every day, but I only trade Tuesday, Wednesdays, and Thursdays London session. Just so like I don't trade every single day personally. Just so I can have more control and discipline around my trading and also prevent over trading and have more rules to follow. Because the more control you have over your trading and set rules that you follow consistently over and over, that's what actually creates discipline over time, right? And consistency. But if you just trade and do random shit all the time, that's what you're gonna develop. If you have no rules, if you have no trading plan, if you just trade whenever you feel like it, your results are gonna be correlated to that. But okay, everybody, I'll see you guys next week. I'm gonna get some sleep. I'm gonna save this and send it over.